Good afternoon. You're in the session about target setting by finance for biodiversity, and it's very explorative. Also, the session itself is very ambitious, as we like to have 8 speakers, and also have some discussions. So please stay focused, although it's late afternoon already. I'm Annemarie Boer. Let me check where to point at, over there. So this is the session you're in at the moment. Finance for nature, setting targets, ambitious, but also to what extent are disclosure systems fulfilling needs to meet those targets. So I'm Annemarie Boer. I'm leading the workstream finance of the European Business and Biodiversity Platform. I'm doing that together with Anita de Horde. And this finance workstream is a community of practice with 17 leading financial institutions, European banks, investors and impact funds. And we have been looking at biodiversity accounting, but also positive impact. And target setting actually has been a topic also as a side something of almost every meeting we have. We have about 2 meetings per year and additionally this type of meetings. So it's also on the agenda. And there's members in the community that are setting targets, like ASN Bank, who was speaking in the session before this one, aiming for positive impact in 2030, but also Actiam looking at deforestation. But there's other commitments. So AXA is looking into biodiversity impact. EIB is having this natural capital finance facility. Piraeus Bank is looking at the protection of biodiversity and doing projects in this. And also FMO has a commitment for impact fund. Just some examples of what is going on. So we have an ambitious session, I said. We have 2 speakers from finance, and then we'll have a brief discussion focusing on the needs for target setting. Then we'll have some inspiration from scientists on the topic of target setting for biodiversity. And finally, a look at disclosure systems and to what extent they are meeting the needs at the moment. So I'd like to ask first to come forward Joshua Berger. He's Berger, working for CDC Biodiversity, but also at the same time, oh yeah, I can invite you in here. I'll invite you in, sorry. So he'll have the first talk about target setting for biodiversity. Thank you.
Thanks. So CDC Biodiversity is a subsidiary of Caisse des Dépôts, the public financial institution in France, the largest public financial institution, managing around 150 billion euros of assets, and with more than 100,000 employees if we account for the subsidiaries and the whole group. CDC Biodiversity is focused on biodiversity, as its name suggests, and we are working on biodiversity offsets, biodiversity restoration. We have a club of businesses working toward toward positive biodiversity impacts, and we also do research and publication. So I'm in the research and innovation team, working especially on corporate biodiversity impact measurement. What I'm going to talk about is why it's possible to set targets for business, for finance, and why it's needed. So this chart is a chart of the remaining biodiversity on Earth. So if we were at 100%, we would have totally undisturbed, pristine habitats everywhere on Earth. And obviously it's not the case now. We are around here at 63% of biodiversity remaining, and it means we've lost about 37%. The metric used here is the mean species abundance, which is about the health of ecosystems, ecosystem integrity. So that's one of the aspects of biodiversity. We need to look at different aspects of biodiversity. That's one of them. And the trend is decreasing, so we are losing biodiversity every year. We are losing about 0.25% every year. So if we translate that in terms of area. That's about 330,000 square kilometers every year. So we've already lost the equivalent of the area of North America, Europe, and Oceania combined. And now we are losing, by 2050, we are going to lose the equivalent of China and India combined. This is the business as usual scenario. And then we've put here some targets which could be set at the COP15 in Kunming in China next year. So bending the curve, trying to reverse the trend directly or reduce the speed of loss by 20% every 4 years. Whatever the scenario that is chosen in China, we are going to have that kind of targets. So at 72%, which is the currently best knowledge about the planetary boundary for biodiversity, functional biodiversity. So if we are above, we are safe. If we are below, we are increasingly in danger. Or maybe it will be something like 59%. We don't know yet. That's the goal. That's the problem of the states, the parties of the COP. But we will have a target and probably some trajectories, which will be translatable into MSA in other metrics. And then it means we can have a budget of, actually the budget is above, so what we can lose or what we need to gain compared to now. And with this budget, financial institutions and businesses can set targets to themselves, so I think it will be the topic of another talk about science-based targets. There are a number of tools that can contribute to measuring those contribution of businesses to the targets. So I'm not going to detail them because I've got 2 minutes left, but some of them, so this mapping is to show that it's not that complex, and actually you've got different business applications and different areas of types of thing you want to do with the reporting, with the biodiversity measurement. And you actually have only a few tools for each use. For instance, to assess the impacts of whole corporation or of financial institutions, you have only like 5 tools. And they are converging, so that's the topic of another session currently ongoing in parallel about aligning biodiversity measures for business. And finally, this might be the framework of the COP15, what the targets that come up of COP15. Katia will probably talk about that again in a few minutes. We might have targets related to the state of biodiversity, then drivers of biodiversity loss and enabling conditions or responses. And tools like the ones I described here can help to measure the contribution of businesses to the drivers of loss of biodiversity, to their targets like zero net deforestation, like the one from Axiom, for instance, and their actions. And so the tools like the GBS, but others, can measure objective by objective, action by action, what's the contribution of financial institutions, and then add that up to come up with a total footprint and see how it compares to the state of biodiversity, and so what's the contribution of a group like CDC to a target like that. Thanks for your attention.
Okay, thank you. Sandra Castaneda, Triodos Bank, Spain. Thank you. Talking about food policy.
Thank you. Does it work? Yeah. Yes. Perfect. Thank you, Anne-Marie, and thank you for the invitation. I'm very honored to be here because looking at what other financial institutions have done and their volumes, it's surprising in a way that Triodos has been invited to talk here, but I guess this has a hidden agenda. It's just a guess. And I'm also intimidated because I feel there are a lot of brilliant brains in the room, brilliant scientific brains in the room, and my disclaimer is that I'm not a technical expert, so I'm a firm believer in putting people and planet first, but I'm not a technical expert. Having said that, I read somewhere in the documentation for this session that they wanted us to connect ourselves with a picture on nature. I didn't bring any slides, So I'll just tell you about my picture. And I've worked for 11 years in the fashion sector. I've worked for Inditex, which is the owner of brands like Zara, which is, it's the largest retailer in the world for fashion. And my picture, rather than a picture of nature, is a picture about nature. And it's the picture of Inditex signing their public policy on ancient and endangered forests as part of a campaign led by civil society, by an organization, Canadian organization called Canopy, who work great, by the way. If you don't know them, check them out. They're brilliant. They're very effective in moving industries forward. And that was a step forward that I never thought Inditex would take. And it's already delivered results. And it's something that, coming back for myself to the financial sector, that image inspires me to move forward and putting biodiversity in the agenda of financial institutions as well. That being said, Triodos Bank, as you might know, only finances initiatives, businesses, organizations that add value from a cultural, social, or environmental perspective. So we do finance agriculture, but only organic agriculture. And that's been like that forever. That's why we were funded already almost 40 years ago in the Netherlands. We now have a balance sheet of 15,000 million euro. We have about 1,500 co-workers and about 700,000 clients. So that's the size of Triodos Bank. We have operations in Spain. Obviously, that's why I'm here. I work out of the Spanish office. But we also have branches besides the Netherlands in Belgium, in the UK, operations in France, also in the UK, and what did I miss? Belgium? Yeah. So with that introduction, I'd like to state that for Triodos Bank, biodiversity is a natural, integral part of our vision on food and agriculture. We've never financed big agriculture because, amongst other things, its impact on biodiversity. And we have built a portfolio in organic agriculture because its impact, positive impact on biodiversity. And that connects me to one of the questions that is also on the instructions of this session. There was a question, the last question around what do financial institutions, in which way are financial institutions dealing with the interlinked impact dependencies, blah, blah, blah. To what extent is it about decreasing negative impact, minimizing dependency risks, or is it about including opportunities for restoration as well? We do know that it's not only about funding nice biodiversity positive projects, it's also about not funding the ugly ones. And our experience in carbon, which is an impact that we measured last year for the first time with quantitative data, has learned us, and that's what we're fighting for as well. Regarding, very briefly, I only have like half a minute, impact measurement. We're not measuring biodiversity in quantitative terms, but we are, in a way, impact is an important and a growing area for the bank, taking into account that we don't tend to finance initiatives that impact negatively on biodiversity. It's relatively important, but it is important. We started measuring our CO2 emissions quantitatively, so that's a step we've taken forward. We are also measuring, and this is how we started in our impact assessment, maybe in a quite a naive way, the amount of meals that our agricultural finance deliver. So We know that in 2018 we financed organic farming and food production for the equivalent of 32 million meals. So that's a way to measure. And they're asking me to stop here, and I had, it's very frustrating, because I had 6 recommendations for how we could measure and account and be transparent about biodiversity from our learnings measuring our carbon footprint. So maybe I leave that for the discussion later.
Well, we have a little discussion with the two of you, so we can include it in that. Because one of the questions is, and then, why would a finance institution set a target? What would be the reason to do so? Maybe both of you could answer that briefly.
Why we should set the targets? So as CDC group, the board of CDC recognized that biodiversity was a material issue for us as a group, and is preparing a biodiversity strategy to be aligned with whatever will come up from CBD COP15. And it's a bit like for climate, there has been a growing awareness at the board level that climate is a material issue, and that we need to deal with it, especially as a public financial institution. It's an important topic to be aligned with the expectations of our stakeholders, and especially the French public. So that's one reason to set target. Should I answer the other questions too, or no? Not yet.
Yeah, I think for us it would be primarily about setting an example. We've done it again with carbon, so I guess with biodiversity it would also be leading the way, showing that it can be done. Yeah. Okay. So our this is I didn't know that I had a little bit extra time. Good. So some of the things that we've learned from our carbon experience, and I can tell you more about that later specifically, but obviously we need a harmonized way of measuring, and that's not obvious for biodiversity, I think, yet. Our carbon tool was built by financial institutions, for financial institutions. That might lead to think, oh, you do it and you use it, and there's no what's the legitimacy of that. But it's done also open source. It's done in partnership with civil society organizations, but it's built by the industry for the industry. So it's easier for us to use it because it's made by us. We know how we work, so we know what's the best way to report. It needs to be adopted internationally, of course. We always say that perfect is the enemy of good, so we should start somewhere and not hide behind, oh, there's no perfect way to measure, so let's just start with something, with what we know. And we also like to say that we like setting targets and meeting targets without missing the point. So I think that's really important, that we don't miss the point just by setting the targets and developing this methodology, and then maybe we're missing the point. So.
Okay, many thanks. I'd like to jump to the next panel team, the science team. We have found 3 science people that will give a little bit of background of what is now underway on science-based targets. And first we have Katja Karousakis from OECD, so you'll have 5 minutes. And you can use that microphone. Yeah.
Thank you very much, and thank you very much for the invitation to be here today. I am going to speak very quickly because unfortunately I have too many slides, so I'm just going to announce that now. Just to note, I mean, the OECD, it's an IGO, intergovernmental organization, 36 member countries, additional number of key partners, and basically our work is promote policy effectiveness, pushing the envelope and providing technical analysis, collecting data, evidence-based information to help decision makers. And I'm going to highlight a few points, basically pulling off of a report that we prepared in May for the G7 Environment Ministers meeting, where we were asked by France to prepare a report on biodiversity, finance, and the economic and business case for action, where we covered a number of different things. But really, I'm just going to pull a couple of points from the finance, the business side, and also in terms of the target setting for the post-2020 framework. And in this context, just in some factoids, if you like, with regard to the dependencies of businesses on nature, more than 200 to nearly 600 billion is the market value of animal pollinated crops, just to indicate in a sense for the case of agriculture. Value of tourism based on coral reef, estimated around 36 billion. And then here impacts. Today we know from FAO, for example, that 33% of our fish stocks are at unsustainable levels. And another factoid, 24% of insecticides use is only based on just cotton farming alone. So lots of dependencies and lots of impacts as well. And I'm going to just highlight where we are today, mainly in a sense from the government side with regard to the post-2020 framework in the context of targets and indicators. Here, please ignore the shape of this non-triangle, because the shape doesn't matter. But basically what parties to the Convention on Biological Diversity are talking about is the need for a mission to 2050, goals, and then specific targets on state, on pressures, which are the drivers that Joshua was referring to, and also then targets on responses. So what are the actions that can address the pressures that we have today on biodiversity? And I've highlighted here what a lot of parties are calling for, which is different to what we have today, which is the 2011 to 2020 strategic framework, is recognizing some of the weaknesses of the current framework. They're really calling for much more specific and measurable targets in a post-2020 framework. And that also the targets need to be designed much more closely with the indicators that will then be used to monitor progress against the targets. So these are just a couple of things. I do want to highlight one of the things that we're proposing in our work is the use of headline indicators, so a smaller subset, so that countries are using the exact same metric against particular targets so that you can monitor progress in a much more consistent and comparable way across targets, which today you can only do for very few of the 20 Aichi biodiversity targets. And listed here some of the types of targets under state pressures and responses that parties are beginning to talk about actually right now. It's still in early stages, but I think it's going to move very, very quickly. So I mentioned parties are really now calling for SMART targets. I mentioned specific and measurable, but the acronym is SMART, which is specific, measurable, achievable, realistic, and time-bound. Our work is only focusing on the specific and measurable. We don't want to get into the political issues of whether it's ambitious and realistic, etc. And we're working on how to develop indicators to monitor progress. There's really much greater emphasis on that we really need to address the pressures on biodiversity coming from the IPBES Global Assessment Report that you heard from Anne this morning. And these were the 5 key pressures on biodiversity. And hence, you need to come up with a suite of responses or actions to address each of these pressures, and hence put targets next to those. Much more recognition that mainstreaming biodiversity across all sectors, across agriculture, forestry, fisheries, mining, really needs to be done in order to enable transformative change. Something that maybe is somewhat questionable, the extent to which that's been done up until now recently, and the need to engage stakeholders. I'm already supposed to stop talking. So in addition to mainstreaming across all sectors and need to engaging all stakeholders, I mentioned some of the sectors above, but there are also calls to incorporate targets for business and the finance sector. So that's something for you to think about and to try and help work with the governments to tell us what to put in there. So what would be possible targets from the business and finance side that are specific and measurable and quantitative that we can then monitor progress against. Here's a list of some upcoming meetings in the international negotiations, and I'll stop there. I'm sorry because I'm out of time.
You can read the...
Yeah? Okay. So I think we already have heard from other speakers actually, so I really am going to rush through this. There are at least a dozen approaches currently underway to measure impacts from businesses and biodiversity, and really it would be really helpful to try and converge those different approaches so we can have a more consistent and comparable way across different sectors, across different businesses. And then the questions that, in a sense, I have to you as the business community is, what specific and measurable commitments, targets can the finance and business sector contribute to the post-2020 framework? Thanks.
Okay, thank you.
I'm sorry.
Okay, Nicholas McFarlane from IUCN and also part of the Science-Based Targets Hub of the Science-Based Targets Network.
All right, good afternoon, everybody. I'm Nicholas, I'm from IUCN. I also lead the Biodiversity Hub in the Science-Based Targets Network. And I'm here to talk to you today about science-based targets for nature and biodiversity. It's pretty good to be back in Spain. I've spent a lot of my career here tagging whales in the south to study the impact of human disturbance on marine mammals. And that type of disturbance or pressure on biodiversity and nature and how it can be measured and counteracted is really what this conversation around science-based targets is all about. When we're talking about science-based targets, we're talking about a pretty powerful approach that at its essence describes how specific actors, such as companies or financial institutions, can identify specific actions in specific places that together add up to this global planetary target for biodiversity of the kind Katja and others have introduced. Some of this work is being done through the Science-Based Targets Network, whose raison d'etre is developing methods for setting science-based targets. It's a broad consortium of partners from business, from civil society, from academia. A number of them are in this room. And what they've done is gotten together to build on the success of science-based targets for climate, where 670 companies are already setting science-based targets to reduce their greenhouse gas emissions and generalize that to other environmental dimensions beyond climate. And that's really just because, I mean, we all know that the fight against climate change can't be won by itself, but rather we need to set science-based targets for all other environmental dimensions, for fresh water, for oceans, for land, and for biodiversity. So let's zoom in on biodiversity, the topic of this summit. We've heard a bit about this global target, this new mission for the CBD in the post-2020 framework. And we can anticipate that this biodiversity analog to the 2 degrees Celsius for climate is going to be something along the lines of stabilizing biodiversity declines by 2030 and restoring them by 2050. So what's the scientific basis for biodiversity targets? They're going to need to span all the 3 different parts of biodiversity. That's genetics, ecosystems, and species. It's pretty early days for genetic biodiversity, although some work is underway. There are methods, you've heard about many of them in conversation, for ecosystem targets that are under development. Some of them are going to require further review and convergence, but these are going to be really essential for keeping common species common. And the complementary targets for species, which are likely the ones that are the most advanced at the moment, are the ones that we're going to be talking about here. Looking at those science-based targets specifically, the question really becomes, what do you need for a science-based target to be good? And if there's nothing else you take away from these 5 minutes, these are what I want you to hear. A science-based target needs to be measurable at all different scales. It needs to be comparable between different sites within a country and all over the world. You need to be able to take those pieces and add them up to meet this global target. And likewise, you need to be able to take this global target and break it down into specific actions for specific actors in specific places. It's got to be fast so that it's useful. And it's got to be able to measure both threat abatement, how do we deal with the pressures on biodiversity right now, and restoration, how do we get from stabilizing biodiversity at 2030 to restoring it by 2050. Looking at those species targets a little more closely, the question becomes, what is the specific target for conservation gain that can be achieved by any actor in a place going towards that global target? For species, it's important to focus on the species that are most at risk of extinction, so that you can act on the areas where things are most pressing. One way to get at this data is through the IUCN Red List, which can provide a lot of this information, although it's not the only way to arrive at this answer. And what you can do is combine all of this information together across all threatened species to create a global heat map of opportunities for conservation gain. So in any 5 by 5 kilometer pixel, you can look at what the contribution to increasing species survival probability that can be achieved by working in that pixel. What is the specific science-based target in that pixel that when added up together with all the other pixels will achieve this global goal? We can slice that across countries, so we can see that Indonesia, for example, has 7.8% of the opportunity for global species conservation around increasing survival probability of species. Or we could slice it across different types of threats and see that, or pressures, and see that the annual and perennial non-timber crops can contribute 18% of this. Or another way we could slice it would be across logging and wood harvesting. And if I could just leave you with one thought, that's that one of the most useful things to do is when you're setting a science-based target is figure out how to make the target as close as possible to the thing that you actually want to measure. So how do you relate a change in something measured against this target to the thing that you actually care about, whether it's species or ecosystems or genetics? Thank you.
I'm asking the third speaker, Katie Leach from UNEP-WCMC, and she's also leading work in this area with UNEP-WCMC.
Thank you. Hi everybody. Is this on? So good? Yeah. Great. Hi, so I'm Katie Leach. I work at UNEP-WCMC. It's the UN Environment Programme World Conservation Monitoring Centre. We're a UK-based charity, but we are a collaborating centre with UN Environment. Most of our work is around biodiversity, biodiversity assessment, and also around natural capital too. So I just wanted to give a bit of a summary on some of these discussions so far. So we've talked a lot about different targets. There's a huge number that are developing. So we've got bending the curve for biodiversity loss. We're talking about science-based targets. We've got the post-2020 Global Biodiversity Framework as well. And also a number of corporate commitments. So these are sort of things that Anne-Marie set out at the start. There's a number of financial institutions that are setting targets, a number of corporates that are doing the same. But it's important that we track all of these, and I think it's quite overwhelming the number of things that are happening, and so it's, I think one useful output is about bringing these together and really tracking these different initiatives. I wanted to touch on, so we mentioned briefly about measurement. So UNEP-WCMC over the past year has been leading an initiative called Aligning Biodiversity Measures for Business. So this is something that's come up in lots of the discussions today. There's a huge number of measurement approaches, but what we're trying to do is bring all of this together so that we can seek common ground between those different approaches and help business understand which measurement approach is most appropriate for which particular business decision. So this quite confusing table here, which is in progress, it's not the final version, It sets out all of the different measurement approaches, the different business applications that you might want to use them for, and the organisational focus of those. So we're hoping to develop this into a decision tree which can guide business on using these different measurement approaches. And this is really important because we talk often about targets, but it's really important for us to consider how we're actually going to measure progress towards those targets as well. So related to the finance sector, UNEP WCMC has been collaborating for a long time with the Natural Capital Finance Alliance. So we've been working to develop a tool called Encore, which is about natural capital risks and how you can explore those in more detail. But there's also, when financial institutions start to think more about biodiversity, what can we do going into 2020 next year? It's important to think about some of these questions that I've just outlined here, and that's what we're trying to address in a piece of work that we're developing over the next year or so. So, as a financial institution, am I influencing biodiversity through my investment or lending portfolio? Am I harming or building the resilience of biodiversity with my investments? Or is my portfolio in alignment with biodiversity targets? I think these are all really important questions, and we need to develop some kind of tools and information that can help financial institutions be able to address this. So one way we can do this is we're starting to speak to financial institutions. So we know that people are looking at biodiversity targets, looking to develop this. So we're starting to speak to them to understand, firstly, like which economic sectors have the highest impact and dependence on biodiversity, and then exploring the feasibility and the effectiveness of those different metrics. So we've got all of these different measurement approaches, but as a financial institution, trying to understand some of those questions that I've just laid out. What do you actually need to measure? Which of those approaches is most relevant in this case? And then, is there a way that we can link this to scenarios so we can start to understand if a particular industry is developing in a certain way and you're investing in that through your portfolio, am I actually contributing to the loss of biodiversity through that? So quite a complicated and ambitious piece of work, but I think this is all quite important. So yeah, that's all I wanted to say, but yeah, happy to answer any questions about it. Hopefully I kept time.
Thank you. So what I was wondering whether from these science perspectives that you've heard, there are any questions or suggestions to the science people they need to look at for generating next steps for finance organizations to set targets or meet targets.
No, because I'm actually involved in the different projects, so I don't have any questions to them. I'd just like to come back to one thing you said is it's difficult. We don't know yet how to measure biodiversity, the biodiversity impact of the bank, but actually you do. You've got the different tools that Katie listed and the ones I listed also, which are the same. And so you've got at least 3 ways to look at the impact of a financial institution. You've got the way ASN Bank is doing with Pré and Crème, using the biodiversity footprint for financial institution tool. Then you've got the STAR tool from IUCN, which can also help you look at the endangered species, the impact on endangered species. And then you've got the global biodiversity score that CC Biodiversity is working on. So I think we need, I fully agree that we don't need the perfect tool to start, and that we should start right now. We don't need to have the perfect tool, and several tools already exist. So let's start now and let's engage with the different tool developers and start measuring.
I'll just respond to that. I didn't say that there wasn't any. I said in our experience with carbon measurement, we need to build one tool. At one point in the process, there needs to be one harmonized tool. Now there are several, also for carbon. But if we want to scale up, and if we want to make it relevant and significant for the financial sector and for biodiversity, we need to end up with one that then can be used worldwide.
What I noticed also in the discussions in advance, that there was a discussion whether it's first about target setting and then look at how to measure it, or whether it's first about start measuring and then set targets. And I'd like to also hear your opinion on that. So people that would like, okay, he's a timekeeper, so. No, I just want to make it more like standing up and that kind of thing to get a bit more energy in the room as well. So if you think that it first starts with target setting, then please stand up. Yes, okay. Don't be shy, please do. Okay, maybe just have two people explain it a bit. Yeah, Roel?
Of course. Hello? Yeah, of course you can wait until you know your exact impact. But yeah, we started from looking from outside in, looking what's happening in the world, and setting an ambitious target without even exactly knowing if we can reach it. But since the severity of biodiversity loss is so large, we need to set audacious goals and just start.
Okay, thank you. And someone over here was also standing up. I'm not sure who it was. Yes, please. Comments? Yeah.
I think the previous speaker just said it all. This
Okay.
is exactly the case.
Excellent.
We know the damage, we know the risk, and,
Yeah.
and we have to put the target, measure it with the risk, and then start working from there.
And who is more in favor of first start measuring and then set targets? Please stand up if you are more in favor of first measuring and then set targets. Actually, all the others should stand up then, I think, but no. Okay, I'll ask you to answer that later. So, who'd like to, Joël, briefly explain why?
All right. So yes, Joel Day from the Biological Diversity Protocol. I think there are two main business applications. There's internal decision making, which can be very flexible. You can have different targets for your business based on your stakeholder interactions. However, if you want to look into disclosure, making global commitments or national commitments, you need to have a global alignment on how to measure impact. And when you look at disclosure, it's really about the quality of information because people are going to rely on pertinent information for decision making. Thanks.
Okay, thank you. Michael, I give you mine.
Well, the ultimate target is set not by an individual financial institution, is set by nature, by the planetary boundaries that we have. But you need to look at where you are at. You need to know where you are and where you need to get to, and then you need to come up with a practical plan as well to achieve that. But I still very much feel for others that says it also needs to set an audacious goal. So the answer is somewhere in the middle, I say. But it's yeah. But you got to be robust about it.
At least get started with it. Thank you. And you had an additional.
No.
It was the same. Okay, great. Shared minds here. Thank you.
It reminds me a bit about the question: do you need a green financial system before you get a green economy, or the other way around? And Frank Elderson of the Dutch Central Bank, he uses the metaphor of this child game where you hop over one another. So maybe you make the first little step, but then you have to do the other one, and then you can deepen the next and deepen it. So.
Yeah. Thank you. And what's the opinion of the speakers? Anyone who'd like to add to what has been said? Katja?
Sure, can you hear me?
Yes.
I don't think it needs to be a dichotomy A and then B. You can work together, and already targets have been set at smaller scales by individual firms. We have had biodiversity offsets for years, which is known at loss. Obviously, they need improvement. You can set targets and indicators, and I do think that to some extent you're going to need different indicators depending on what the target is. So I'm not sure we're ever going to get to one indicator for biodiversity, but that's a separate issue. But you can easily have a target on no deforestation, and that's very easy to measure and monitor. I mean, you don't have to start with perfect. We already have many, many chunks, and we need to act now. So I don't think it's one or the other. I think it's full force ahead on both.
It's a bridge to my next question, but first, Gerard for another comment.
Yeah, and this is why I actually didn't stand up when you ask either measure or set a target. I think, and people that know me, Gerard Bos from my UCN, is I'm saying this at every intervention, is the first question is, what is the question that you're actually asking yourself? Because then you're making sure that you're then measuring and then getting to your target. So I think that's the first starting point. And on biodiversity, the range is so huge that that question is very different from one actor, from one scale level, or whatever that you're looking at. So what is the question that needs to be answered is probably the first question to ask.
Okay, thank you. And you were already mentioning it, Katja, that there is several ways to look at it, and it's also part of this discussion. What I hear Joshua was explaining about mean species abundance, Roel has been explaining from ASMEC in the previous session about PDF. Remind me, potential disappeared fraction? Yeah. And Nicholas was, he's of ISN, talking about the red list of species, so that's more focusing on endangered species. So that's a little bit what I hear, that there's been talking about healthiness of ecosystems and looking at that also with the organic farming, but on the other hand have a focus on extinction of species. So I'd like to ask that question for you. Do you have, so then you have 3 rounds of standing up. Should we look at red list species if it's about target setting? If you think that's the focus, then please stand up as a first target. So should we focus at species that are under extinction and what to do for them? Like what Nicholas was explaining. Am I saying it the right way, Nicholas, or not really? Scientist, please.
I think there are a couple other things going on. Namely that when we think about different sorts of dimensions around setting targets, we have an official definition of biodiversity. It's got 3 pieces. You're going to need targets for all of these things. How you do this is really what matters. And likewise, we have a bunch of different environmental dimensions. We know that we're going to need targets that incorporate climate and biodiversity and land and all of these other pieces. The challenge is, how do you get the individual pieces right so that you can integrate these in a way that actually reflects what's happening? I think that's really the way that I think about this.
The integral way of looking at it.
Yeah, so how do you get each piece right so that the integration is also right?
Yeah, thank you. Any comments from Joshua or Sandra on this?
No, I was just going to add to your previous question, what if it's obviously not about just measuring or setting targets, but can we go a step back, and if you know that you're investing in agriculture or in forestry, and you already know that a certain type of agriculture harms biodiversity and another one doesn't, or same with forestry, can you already take investment decisions? At the same time, you can develop your measurement tools and you can set your targets.
Thank you. Joshua, you like to add?
Yeah, just to say that the aligning biodiversity measures for business projects, which is being explained in the other room, did a work about the different metrics and what they are looking at and comparing them. So I think indeed the idea, as Nicholas said, is not to oppose the different metrics, but that they answer different questions about species or about ecosystems or about genes, and that they are looking at different aspects. So if you want to learn more, look at the ABNB document.
Okay, thank you. We'll move to the 3rd round we have here on disclosure. So I'm inviting Sharon Machado from ACCA, and she will talk about rural assurance and ESG integration. 5 minutes.
Okay. Can you hear me? Yes, you can. Excellent. So a rather odd visual that you can see there. We were asked to talk about our journey to nature, and this was mine. Capitalism was exploding. We were encouraged to actually think about what would make us richer as opposed to the impact of it, and actually even encouraged to laugh at people who did the right thing. That was the 80s for me and the UK. I'm not suggesting it was like that everywhere, but that was me. So what changed for me was, luckily, I grew up, and actually my purpose was education, and actually very specifically shaping education such that businesses can do better through designing qualifications and delivering them, and actually more recently in terms of thought leadership and thinking about the stakeholder journey. So in terms of the profession and our stakeholder journey, what I wanted to do was just put out to you a question we asked our stakeholders, so governments, regulators, students and members. What's important to them? And what appeared was the word cloud you can see above me. What's nice are the words that are big and bold. It speaks to the agenda today, and actually speaks to ACCA's research. So in terms of ACCA's research, I've just pulled up a few pieces that relate to my topic, which is the role of assurance and ESG integration. So whether it's sustainability principles to guide governance or strategy, or whether it's accounting, reporting, thinking about tax, using it as a stick to discourage bad behaviour, or as a carrot to encourage the right things. And then thinking more about the accounting and the reporting, making sure that what is being said is actually what's happening. And that's where the role of assurance comes in, to deliver trust. Because now what we need to be doing is thinking a little bit more about society. Investors aren't the pure investors in business. Society is, whether it's a consumer, whether it's actually somebody that's an employee, or even a supplier. So what I'd like to do is talk about the role of ESG integration within the business ecosystem, which is the circle that you can see on the screen. In terms of that business ecosystem, strategy is at the heart of it. So with strategy at the heart, strategy has to be designed with the stakeholder in mind, which is now society, not just those that are actually directly investing. There are a whole swathe of fantastic tools out there to help that strategy. The one that I'm going to pick up on is actually the circular economy, designing a business circular as opposed to purely up, using the SDGs to help you, and actually also using aspects of the climate targets that we've got, and hopefully more clear targets that we're going to get. And then thinking about that circular economy to drive a net positive impact that we've seen. Strategy has been set, so now let's think about governance, that way of working to get the right mindset within those that are running organisations. Remember that some of those people running organisations grew up at the same time as me. And bearing that in mind, with that, open, innovative, and actually ethical thinking in an integrated way, drawing on the capitals that we've got, financial, natural, human, what have you, to get that value creation beyond, and excuse my mistake there, it's not the UK pound sign that I'm there, it's the global currency I'm talking about. Thinking about value creation beyond actually monetary value. And letting that feed into your business models. So our research is saying, look at all the tools that are there and think about your key sustainability performance indicators as well as the financial ones, and linking them back to your strategic target. So moving on in the business ecosystem is investment, probably the next one after your governance and your business models. Recognising that actually to be brave and change your strategy and be transformative, and we heard a couple of times today, is really thinking about the investor lens. So with regards to the investor lens, thinking about engaging with them properly, recognising that they need ECG values, and actually some of the more sophisticated investors are using ECG data as part of their modelling to make their decisions. We've heard a lot about that today. Risk and opportunity are two halves of the same coin. And in terms of that risk, looking at controls and impact in that holistic, integrated way. With regard to those controls and impact, professional skepticism is what the profession and actually business can give to make sure that actually every risk is identified and generates that opportunity. Performance and outlook, the key thing is that society is the investor now. With society as that investor, be careful. Financial and scientific literacy is needed, and that is an important part. So therefore, when you're using the multiple reporting frameworks that exist, and they're all good, recognising why you've chosen that framework and explaining the rationale to create overall value and continual improvement. Now, I really have run out of time, I think. I've got a few seconds left. And what I'd like to do is just briefly talk about the role of assurance here. Role of assurance, society is the investor now. So therefore, to generate trust, we need assurance. There are a number of challenges that we do face at the moment, and so therefore I don't want to end with a negative, because it shouldn't be about a negative, and that's the reason for my visual, by the way. that actually you can deal with these considerations, deal with the multiple frameworks, recognise that there's a baseline that can be created and measured by working together, looking at our various stakeholders and their diverse needs, prioritising them, and then also thinking about actually fact versus fiction. Big data is amazing, but actually it does require that scepticism again, and that's the role of assurance. My final point, I am a bit scared by the red card there, really is the role of regulation, whether it's for auditors. How many people know that actually, in terms of what's being audited, isn't the full report? Yeah? But yet we all walk away saying the auditors have ticked it off and it's all fine. And then we then discover that actually large aspects are only checked from a consistency perspective. How do you check a global set of financial reports when actually there isn't a set of global investment criteria for that entity? And just being very mindful of those factors. But we can have one set of standards, one set of rules, and therefore make it easier to operate in a world where nature comes first.
That's a clear statement. Thank you, Sharon. I'm inviting Anna Krotova from GRI to also share her views on disclosure and biodiversity.
Great. Well, thank you very much for having me, and great to be here. I wanted to start with just a brief overview of the reporting landscape, because I'm not sure how many of you are actually from this space, and just give a little bit of a description of who is who and how the work of all of our organizations relate to each other when it comes to requesting for data, reporting it, and then using that data. So it starts with standards and frameworks, where standards are really request data that is specific, measurable data about impact and performance. Then you have frameworks which set how this information should be reported. These split on standards and frameworks that request to report sustainability information, or what is known as ESG, or non-financial information, and then standards and frameworks that request to report financial information. And there you have your standard, your traditional IFRS, FASB standard setters that request the accounting, or the traditional accounting information. And then in the sustainability information and sustainability reporting landscape, you have GRI, the Global Reporting Initiative, which is a nonprofit that was created back in 1997 with the aim to start the practice of non-financial reporting. So it didn't exist at the time, and they have really advanced the transparency around companies' performance about and the impacts they have on resources that you use and depend on for their business and for their activities and products and services. And then there are different other frameworks that are more recent, such as CDP, SASB, TCFD, that vary in the type of information that they requested. For example, CDP only looks at climate and forest and water, so they have 3 topics. You have SASB, who really focus at companies that are located in the US. So there's some slight differences there. There's the TCFD, who's really looking at how your performance is impacting the company itself. And then you have frameworks and Capital Natural Coalition should be here as well. Natural Capital Coalition, sorry. And so among the frameworks that ask how to report the information, you have IR, Integrated Reporting, or CDSB, that try to encourage companies to report both financial and non-financial information together in one integrated annual report. And this is what you heard in the panel this morning, to really improve the internal decision making. The work of standard setters is informed by intergovernmental organizations and agencies and think tanks and basically organizations that behold the knowledge about the issues and what we need to understand about the issues, such as the agencies of the UN, IUCN, IPBES, WWF, WRI, etc. So standard setters are not sort of making this up, internally. They're really building on the knowledge and on the findings of that exist already. Specifically the SDGs, before that the MDGs, and before that Agenda 21. And sustainability reporting at the moment is voluntary, but it can be also enforced and mandated by government. So all of you probably know the EU non-financial Directive on Non-Financial Reporting, which mandates listed companies to report their non-financial information. So there's that mechanism as well. Then you have report issuers, or simply companies that report the information and data about their own performance. and impact, you have consulting and assurance companies. Sharon has talked about them quite well, who help companies compile the data or verify the data. You have data aggregators who take all of this data and synthesize it together. And then you have analysts and raters who make an opinion or form an opinion on that data and then trade that further. And finally, most of you here today, I think, is the data consumers. So those organizations that use that data to make their decisions about these companies. And these can be either investors, so triodos, when they decide, do we invest or do we divest in a company or not. It can be different competitors that want to understand how are we trending and performing against compared to other companies, and all other stakeholders that are affected by the activities and products and services of the company. So, GRI purpose is, so it's a set of interrelated standards. There are 36, and they're split on 3 categories, and there's a set of universal standards that basically sets how information should be reported. That is to say that when you're preparing your sustainability report, you should include information that is material to your activity. Information that is placed in a context, so not only that you're supplying your energy from renewable sources, but also that at the same time, you're actually extracting materials or rare earth materials that are critical. Other criteria or principles that GRI standards set and how to prepare your report is that the information has to be timely, it has to be accurate, it has to be comparable year on year, and so on. And so the standards are split into 3 other broad topics. So topics that relate to the economic performance of a company, environmental and social. And there are also sector standards that we're currently updating that will help companies from various sectors understand, okay, so what is material to them and what do we need to report on? And so when a company reports using the standard, it should understand for itself primarily, but also be able to communicate that outward, what is its performance on the environment, economy, and society due to its activities, products, and services. And so in the R300 series, or the environmental standards, we have these 8 standards that are already looking at many issues that we have discussed today. So land, water, ecosystems, and how the organization is affecting, or what's its performance and impacts in these areas. I'm not going to go into the detail of these, we can talk about it in the break, but we have a standalone standard on biodiversity, which is what I want to walk you through, and it's a little bit busy, but I'll be quick with my one final minute. So when a company would report on 3 or 4 standards, first of all, it would understand for itself, okay, what operations may have an impact on biodiversity? What is the nature of that impact? And what is the significance of that impact? And what is the extent of, what is the organization doing to prevent and remediate that impact? Now, on the right side, we have what we call in the GRI world disclosures, but these are simply proxies or indicators or metrics that help you understand, okay, well, how are you then performing on these questions? And so in the proxies for understanding the operational activities and what they impact, we're looking at the protected areas that are affected, or the areas of high biodiversity values that are affected, as well as the IUCN Red List species and National Conservation List of species. When we're looking about the nature impact, we're trying to understand, is that the pollution, is that introduction of invasive species, pests, and pathogens, is that the reduction of species, is that habitat conversion, or changes in ecological processes? And when we look at the significance of impact, we try to understand what are species affected, what is the extent of areas impacted, what is the duration of the impact, and whether that impact is reversible or irreversible. And then finally, when we look at the extension of the organization's activity to prevent or remediate the impact, we're looking at the habitat areas that are protected or restored. So that's where it stops. But next year, we are going to update the standard. And what I would like to understand from you is these indicators, how do they work for you, both practitioners as well as the data users? What's missing in these indicators such that we can include them in our standard going forward? Thank you.
And we'll talk further on that in a few minutes, but first we have Jacqueline Jackson from S&P and TrueCost, and she'll have the final introduction on disclosure for biodiversity.
Hi there. There's only a few moments in between me and the networking drink, so I will speak as fast as humanly possible. My name is Jacqueline Jackson, and I'm an account director looking after our clients in the UK, across the whole of Europe, Middle East and India, which I believe is probably similar to the volume of biodiversity that we've lost in terms of land coverage. Now, Truecost itself is part of S&P Global, and Truecost actually is a data and analytics provider which provides insights on ESG risks and opportunities. We work with a number of market participants across lots of different geographies globally to try and help them understand what they can do about ESG risks and opportunities to try and direct capital into more sustainable business models and report better to various stakeholders. ESG itself is gaining a lot of attention amongst both companies and also investors and even consumers. And you can see also from the chart on the right that we're beginning to see increasing evidence that ESG actually has a link with potentially financial performance. As well, we've seen that the UN PRI since 2006, in terms of assets under management, has grown 12 times to reach 82 trillion, or nearly $82 trillion worth, when it was last recorded in 2018. An increasing body of evidence as well is showing that there could be a link. But in terms of what I focus on, it's what kind of data do we need? And data needs to be standardized, it needs to be relevant, and it needs to be timely. It also needs to be able to be plugged in seamlessly to current business processes and reporting systems which companies or investors have. There's a number of frameworks out there which seek to do this already. Most of you will have heard of the Natural Capital Protocol, which is designed to help integrate natural capital into business decision-making processes. And the Natural Capital Protocol itself defines biodiversity as inextricably interconnected with natural capital itself. On the right, you can probably see their framework for how natural capital could be integrated into business decision-making. And there's a number of companies already which are looking to report in this way. You will probably all be familiar with Puma. In 2011, they actually launched the world's first ever environmental profit and loss account using Truecost's natural capital valuations. Natural capital valuations, of course, are putting a monetary value on a traditional environmental impact to reflect what that impact is upon society. And this can be really useful because it can help compare trade-offs between different environmental impacts or different decisions that a company might need to make. And it can also quickly highlight where hotspots of risk or material risks may be within the value chain itself. Another example, which I also like to use, is one that we did for ICBC, which was looking at how can we devise environmental stress testing methods that are forward-looking to understand what material risks may be, for example, in China. And the reason I use this as an example is because this is looking not so much at impact, so what's the negative impact you have as a business on society, but actually what do you depend upon? And dependency is really interesting to me because that's exactly where risk can become really internalised and affect operating margins and create profit losses or earnings at risk for investors. And so finally, just to summarise, one thing that I thought would be good to highlight before the discussion is what are the current barriers and what do we need for those to be overcome? So I think one of the first and most important barriers is the fact that we have data gaps. Data needs to have more in terms of quality and in terms of quantity. At the moment, we're looking at data which goes back maybe 5 to 7 years on average, whereas traditional investment algorithms are using data from hundreds and hundreds of years, practically. So that's a key problem. Another issue as well, in terms of data gaps, is the fact that we need more geospatial data to overlay with existing natural capital data sets. You know, understanding exactly where are assets located and how can we use that information to make natural capital impacts more relevant. We've just recently launched a physical risk data set which looks at 6 different types of physical risks, scores them in terms of risk impact, and does that across 3 different time horizons and 3 different scenarios. And what we're trying to do at the moment is work with IBAT. If anybody hasn't heard of that yet, they should Google it, it's very interesting. And they are hoping to see if we can maybe use their data with asset level data and information to make a biodiversity module to our current physical risk product. And as well, one thing that we need to do is be able to use models and proxies really efficiently, because of course we're not going to be able to scour every single centimetre of the earth and do everything manually if we want to do anything on time. And of course, financial data needs to be better. We have studies that show there is a link between financial performance and ESG, but there needs to be more of that information available. We need to be able to make the business case better if people are actually going to mobilise money into fixing some of these problems. Sad but true. And of course, finally, we need to make sure that our financial data is not just about potential risk, but it's forward-looking and it looks at different scenarios. Finally, of course, climate change has been key in the media at the moment. It's been all over the news. Everybody's talking about carbon impacts. Everybody's disclosing on carbon almost. But really, we need to move beyond climate, because climate and biodiversity are inextricably linked, and therefore we need to have better disclosure on broader ESG factors that are not just carbon anymore. And again, models and proxies will help us do that. And of course, the final point is obviously that we need to build capacity. Asset owners, asset managers, companies and banks need to be communicating about how they're using ESG better, rather than keeping it as a competitive advantage angle or not discussing it. And of course, that's why events like this are so important, because it brings stakeholders together to discuss these issues and work out what to do next. So, thank you.
We have 5 minutes, and I wanted to ask what suggestions or missing items you would advise to the disclosure initiatives they can include better or make an advantage for you on better performing for investing for biodiversity. Is there anything missing in the disclosure? You can move here, then we have the science, you can ask the same. Thank you.
So at Biodiversity, we are trying to work with the data providers, and I found the slide very useful from GRI. With the data providers on the right, with Sustainalytics, with ISS, with TrueCost, with MSCI, and that's something really needed if we want to be able for large financial institutions to have a rating of all the companies under investment and across different asset classes. It's not possible to do it on a case-by-case basis. You need to have thousands of companies scored, and so that's a key issue. So the advice is that we need to link the tools that were listed, about 12 tools that were listed to measure biodiversity impacts, with the data from the data providers, and also they need to collect more data from the current non-financial reporting, because some of the data are there on businesses, but now they are not stored by the stakeholders like TrueCost and ISS and MSCI.
Okay, and are there any suggestions from the science perspective to the disclosure?
Yeah. I'll start, you can follow. So one of the things that I think is really important is, so we often now thinking, so we've thought about climate, we're now thinking about biodiversity, but as you said, they're all completely linked, and it's not just biodiversity and climate, it's fresh water and land and all these different parts of the system. And I think a natural capital way of thinking can encompass all of this, and so what I think is possibly a consideration for disclosure is about looking at the impacts and dependence of all companies on, and what their impact and dependence on natural capital is, and on different capitals, so the social, human and natural capital component, and bringing that all into one system so that we can see that all as a whole. I think that'll be important.
Thank you. I guess I just have an observation around, or maybe a thought or a question around complexity here. Because everything we've talked about today is pretty complicated. And as we think about bringing in other environmental dimensions into this, it's going to get more and more complicated. And we talk a lot about the need for simplicity. And what I'm wondering is how much we actually need simplicity versus ease of use. Because the world is pretty complicated, and if we reduce it too much, we're not going to be able to say anything that actually means anything. But maybe what we really need is some way of just making it easy to use.
I can certainly respond to that. I agree, this stuff is not simple, it's not simplistic, and it shouldn't be, because then we're not really being honest with the challenges that we're facing. I think there is a case for bringing this more easily to who needs to report and use this information. So making this both reporting easier, there are various suggestions to do that through digital reporting, etc., as well as making that data more accessible. But I don't think that we can think of 3 metrics and then we've understood what's going on.
I'd like to further that point actually, and what I think is not necessarily the right answer, but it's on the way to the right answer, is a single conceptual framework that joins it together. Like there's a single framework for financial reporting, perhaps a single framework with principles upon which actually sets of standards are developed. And then linked to that, I think clarity over what we are getting assurance over. It's all well and good having lots of reporting, accounting and data sitting behind it, but we need to understand actually how reliable is it to help our decision making, and link that to the value chain. And that's really where I think some steps have been made quite positively with regards to integrated reporting and integrated thinking in particular about how all the capitals connect together.
Okay, thank you very much. I have to close the session, unfortunately. This is a discussion that will take up further also within the community of practice the coming year. So stay tuned on what is going on via the newsletter of the Business and Biodiversity platform. I want a warm applause for the whole group of speakers. And so we continue. It was a very ambitious session, considering time and also the warmth here in the room. Thank you very much all.